So yesterday I took a trade, and it was not a trade out of necessity. It was more like a FOMO trade, or should I call it a bored trade. I was so bored that I took a trade on the AUD against the CAD, that is the Australian dollar against the Canadian dollar, and I took it opposing the entirety of my strategy. It looks like it makes sense. However, I don't have a reason to sell this market yet. Why? First and foremost, fundamentals of this market is absolutely against me. Absolutely against me. I just want to show you guys real quick. I'm going to turn this and you can see the fundamentals of this particular market is totally against me. That is saying we should go bullish, basically. That is what the fundamental is saying. And for the first time in a long time, I have a very, very, very minute variance. Matter of fact, everything here is above 50, meaning there is a high tendency for this market to keep grinding upwards than there is for it to go low. There's a higher tendency fundamentally, right? But yeah, I was trying to short this market. Now, this was a bad trade, but it wouldn't have been this bad if the market had already done something like this in this 4-hour time frame, right? If the market had gone below this low and was pulling back before I did this, then it would make sense. It would have made a lot of sense if the market had gone below this low. That is before I started doing the rubbish I did. But it didn't. It wasn't even doing that. And I took a trade. But the good thing is I was able to catch myself very early. And the reason why I took this trade was because I was on my phone. I went out. I won't tell you where it was, but I went out. I was on my phone. And when I opened my chart, I saw AUDCAD. I saw the fact that I had that supply zone up there and price was mitigating and slowly rejecting it. So I just took the trade. And then when I got home, I instantly realized, oh, wait, I made something. I made a huge mistake. I didn't check my dashboard before I entered the trade. I didn't check anything. I just went in simply because the supply zone I had there was being mitigated. I did not check if the overall view of the chart was supposed to even be bullish. I just saw price entering a zone and, oh, it's coming out, take a trade. Now, this is more like a lesson for people who are trading like maybe supply and demand, resistance and support. Even if you are the one who drew like the patterns on the chart, whenever you come back to that chart, maybe you're not in the right state at that point in time, it's best you kind of review why you did what you did. That is like the best thing you can do for yourself. So that is that for the AUDCAD trade I took yesterday. It was a loss anyway. It's right here on my journal. Where's my journal? Yep, right here on my journal. So I was able to close the trade real quick. Let me refresh this page. It's messing up. So there it is. It was a trade entered yesterday evening. Came back home and saw the nonsense I did. The next morning, I was like, this morning actually, I was like, what the hell? You can see the trade right here. And you can see I had to put up my fundamental dashboard with it. Like, this is absolute risk, total risk on my part. Luckily, I ended the trade before it even moved, like, should I say, obviously in my direction. You can see it right here. Just a little bit of move to the upside and I end this quickly before it becomes trouble. And this is one thing that would save your account, ending a trade or a terrible trade before it kills you. I'm going to wait on this market because it's supposed to be a bullish market. And if price breaks below this low, then I'll sell, even though it's a bullish market, right? Like it's bullish fundamentally. And why would I do that? Well, the problem here is the bull run has already left me. This is where the bull run was, right? This is where the bull run was. This is where it started from. And it has already left me. Now we are in the supply zone. Most likely going to, expect to supply to the downside or more like push to the downside. But again, like I said, it all depends on what the market do. I needed to break below those low for us to say, okay, yes, this market is now moving in the other direction. That is the way I say it. Now, for another market where I'm trading the Australian dollar against the US dollar. And this market, the trade here is, I'd say, is a totally new, it's a whole new ball game. That's what I'll call it. It's a whole new ball game. Why do I say it's a whole new ball game for me? Well, the thing is this. I'm testing out a particular thing I learned, right? A thing I learned from someone. I won't say who it is because I don't want people to come from me. Because the truth is, I don't know if I know the strategy well enough yet. That is why I'm not going to call a name, but I'm going to draw what it is. And it looks much like the one I've explained before, which is DAX. It looks a lot like it. So I have this low to this high to a low that sweeps the last low, right? And then we'll have a high like this that sweeps this high. And then the next thing is, first and foremost, this is the first thing you're looking for. And we're not looking at they call it order blocks and the rest, but we're looking at this range below, the range where we had like slight consolidation or negating power and all that stuff. And what are we waiting for? Well, we're waiting for price to do something like this and then do this. So this is where we want to take like a buy trade. That is what this whole logic is all about. Sometimes it may happen in another manner, which is something like this. So it could happen something like this, meaning the high was not touched yet, but you know it was close to being touched, right? It was close to being touched, and then price did this but didn't. As long as this drawback or pullback doesn't go into the zone, it leaves the zone before it runs out. So something like this. This is what I was learning yesterday. Now, personally, I don't really like to trade trading patterns, but I just wanted to test and see if it works to a good extent. Now, I'm just gonna take all of this. Let's go straight into the chart. Let's go to the 4 hours of the Australian dollar against the US dollar, and one thing you see here is this. So, so I have my zigzag indicator, right? My zigzag indicator. I'm going to set it to the right intensity, the right deviation, or rather percentage. And what you see here is I'm having a very similar pattern, right? A very, very similar pattern with that one I just drew. So the only thing I don't have here is an actual like second break above before I'll take this entry. But I'm just testing, like I said, I'm just testing something. And it's not like I'm testing with a play account. It's my real account, as you can see right there. It's the same real account that I've been using for a long time now. So I'm just testing it on the real account, and I'm saying, I want to just see, does this even like actually work? Because my natural mentality to this Forex market as of now is that it only moves because of news and like geographic or geopolitical events. That is the way I see it. And then every other thing is like an attachment to that amongst and followed by like the COT report traders. So if the market is moving, I think it's more of like the asset managers, the leverage funds, the hedgers, they have looked at the economic status of both markets and they took a trade. So for me, I'm trading following the same pattern, right? I'm looking at, again, the market, the yield, the technical direction, and then the assets, leverage, and retail non-reportable traders, and seeing what they do on the market, and then trying to trade in that light, in that direction. So, so for me, this is basically what I've been doing in the market all through yesterday and today. Today, a huge part of today. This is what I did today in the market. All of some of this. So I've been looking at this market anyway, and I noticed one other thing, right? I noticed some other thing. I had some other markets that I have a lot of markets I'm focusing on right now, and I'm just going to do a speed run through a lot of them, like a literal speed run. The funny thing is, on these markets, I'm supposed to actually be going short. The AUD US dollar, you can see it right here. But I was supposed to be going short because it's now below 50%. The major news stance is kind of bearish, and the changes is going bullish. So this is part of the reason why I said, okay, I'm going to take this trade, because when you look at it, the recent 14 days says, okay, there's a bullish situation that's going on. So I'm expecting that fall, and then price finally goes for that bullish move before anything else happens. Right? Before anything else happens. But from this dashboard here, I'm just going to reset and we're going to look at, we have a lot of slightly bullish market, and we have currently today we only have one. Yesterday it was 3. We only have one bearish market, like heavily bearish market. But then again, I have already stored a lot of them using, like in the past, the ones I expect longs, the one I expect shorts. And something I noticed is most of the markets are trying to short the Australian dollar, or basically trying to sell the Australian dollar. If you look at it here, I have British pound against the Australian dollar bullish, AUD/NZD bearish, AUD/USD bearish. So some of them are kind of against the AUD market, and then we have CAD and Swiss franc, which is more like for the Australian dollar market. So the market is like kind of confusing, but let's see what I have on the whole table, right? So on the first table, I have New Zealand dollar against the Japanese yen, waiting for it to come into this daily range. Let's just put it like this, waiting for it to come into this daily range, so we can then hope, or rather look if we can find buying opportunities to come into the market. But again, if you follow the thing I just learned, or rather the thing I'm testing, I'm not supposed to be buying here, I'm supposed to be buying inside here. But let's see how it goes, right? Let's see how it goes. Then we have the New Zealand dollar, Canadian dollar, which has been printing very, very good market structure to the upside. So we're waiting for it to come down into the daily range for us to buy into this market. Moving on, British pound against the Swiss franc. Well, this is one confused market, right? Why is it a confused market to me? So it's getting real close to a weekly supply zone. That's the first fact. But then again, we have a tendency for price looking like it wants to come downwards before it continues, or rather makes a move to the upside, which is quite scary in my opinion, right? Which is quite scary. And why do I say it's quite scary? Well, it didn't break above this high. Didn't break above this high. That is one. So more like a reduced assurance. But then again, it's the Forex markets and it's news driven. Moving on to Australian dollar against the Canadian dollar, I'm supposed to be buying in this market. So this was the market I did the stupid shorts on. But the first problem I have, and this is why I even ended up doing like that short trade, was because the first problem I have is if I zoom into this point, I do not have any close by daily range anywhere here. The last daily range we had has been utilized, this one right here. And the next daily range I have for demand zone is down here. Way down here. So in my opinion, this market moving upwards, it's should I say something I don't know where to trade from. That's why I traded the downside value. Moving on to Australian dollar against the Swiss franc, you can see price after creating a very good move to the upside has finally sunk into range. Now we're looking at possible signs of weakness or strength or something, whatever like that, whereby price starts to show us that I'm ready to move to the upside kind of move. You know, pin bar and engulfing bar, or just lower time frame change of market structure. You know, lower time frame, like the 1 hour. I start to see that price come here, and then we start to see things like this. Yeah, then I can finally go into this market and buy. For the like extreme short trade I have right now, like the extreme short perspective I have of the market right now, is for the euro against the New Zealand dollar. This one has like an extreme short view. Why? Because there's it's the euro against the US. So let's say euro against the New Zealand dollar. Am I correct? EURNZD. Yes, we're correct. So I've been having very fluctuating scores since for a long time now. You see, but it's more bearish. It's been more in the bearish zone, like more in the bearish zone. But it's recently sticking out of the bearish zone and it's moving towards the bullish area. Well, it did that before. This was way back in 23rd of May. It did the hey, let's go bullish thing 23rd of May, and then came back down again. You can see how it sank real down, and it's been like this. So I may see that. I'm not saying it will. I may see that sink again, and let's see why or how possible it is for that to happen, right? So right here, I have the euro against the New Zealand dollar, and I'm looking into the news in depth. So for yield, well, it has a slightly negative yield, but not like all that negative. The central bank data has been, whoa, okay, it seems like the New Zealand dollar central bank data has gotten so much strength. So this market is actually something that I should be looking to really sell. Okay, so I do have like credible reasons, as you can see. Inflation data leans more into the New Zealand dollar for strength, but the recent 14 days has shown massive, should I say, upside, but is still currently bearish. The employment data is slightly bullish and nothing new as of recently. The economic data slightly bullish, nothing heavily bullish in recent time. Okay, so the central bank data is the only reason why we should be shorting this market in terms of uh, fundamentals, central bank and the current inflation, as well as the yield, the real yield in this market, right? Real yield is just inflation minus taking out inflation from interest rates. So when you do that comparison, you have better yield with the New Zealand dollar than the euro. Slightly better yield, like very, very slightly. So let's see with all of that, this is where it gets very crazy, right? I have the asset managers, the leverage funds going positive. And to go against the retail traders, I have to go positive in this market. And that is totally against everything I'm looking at doing right here. So what does this mean? It means I have to go and recalibrate. I literally have to recalibrate my move. I'm looking at levels where I could possibly buy. So if today closes well enough, I obviously have a level to buy from this. This would be a very strong daily level to buy for, right? But it all depends on how today closes. If today sinks, then this market is not going to work. So this is all the market I've been looking at today, and I hope you enjoyed the video, enjoyed something, you learned something new also, because this is me sharing my own trading opinions in the market. It's not financial advice. Not financial advice, okay? Just me sharing my opinions and what I'm trading in the market, what I'm looking at as I only trade Forex. When I fully learn and understand what I am learning, I'll come out here and tell you guys, okay, this is what I learned. Feel free to drop a comment below. If you think you know what I was talking about when I was talking about the pattern I was drawing, you know who owns it. It's actually Nigerian. Both of them look very similar, but they are two different people. But it's actually Nigerian. And if you think you know who owns it, you can drop the owner of that style in the comment section below. I would love to see people's answer. I want to know what you think. I want to know if you know, or if you can easily know who I'm talking about without me having to talk about the person absolutely correctly. See you all in the next one. Peace.